Yes, people, a very happy with all of you. So, guys, we're doing this chapter called as Fundamentals of Partnership, and we are in the revision series. In the last class, we've completed our discussion on the aspect of managers' commission, and to a major extent, we have completed our discussion on the concept of interest on capital as well. So, managers' commission, there's nothing much to discuss about or revise about again. It's more about you working out the sums to get a clarity. However, we can do a quick revision on the interest on capital. So very quickly, people, please tell me what is the journal entry for the interest on capital due?
Interest
Okay,
on
before that,
capital.
even before that, who is contributing capital to whom?
Partner to firm.
Partner is giving it to firm. Who is enjoying the money? Firm.
Firm.
So for enjoying the money, what is firm supposed to do?
Pay interest.
Compensate. Compensate. So they are paying interest.
Interest.
So for firm, it is expense or income? Expenditure. Is it an expense of P&L item or is it an expense of appropriation item?
Appropriation.
Interest on capital, is it a charge against profit or is it an appropriation?
Appropriation.
If nothing is mentioned in the question, it is always appropriation.
Appropriation.
When will you take something as a charge against profit?
Mentioned in
The
the
question
question.
specifies, please treat this IOC as a charge against profit. That time you'll take it in the P&L. Otherwise, you'll go to P&L appropriation account. So, what is the due entry for interest on capital? Interest on capital account debit because expense, debit or expense and losses to partners
Partner
capital
capital.
or partners current account. Next, closing entry. P&L appropriation account debit to interest on capital account. Wonderful. Accounting part, all of you are very clear. Calculation part, there are two methods. There's one method where you do calculations of the interest separately on the opening capital, separately on the additional capital, separately on the drawing against capital. So on the opening capital, interest on opening capital. So what is the opening capital into rate of interest by 100 plus interest on additional capital. Whatever is additional capital on that rate of interest by 100 into number of months by 12. Because opening capital is there from the beginning till end, which means you have used it for the entire year. 12 by 12 means 1. So I've not put any number of months by 12 here. But additional capital is not necessary that they'll infuse the money only on the 1st April. It can be infused anywhere in the middle of the year. So from that date onwards till the end of the year, calculate that additional capital is being used for how many months. For that many months only you'll pay the interest. Logic. Now, if there is any drawing against capital, what are you supposed to do? Interest on opening capital plus interest on additional capital. When it comes interest on drawing against capital, you have to minus. Basically, we're trying to reverse the interest on the drawing against capital. Drawing against capital means either opening capital or the additional capital. Somewhere in the middle, you would have removed. But while calculating the interest on opening capital, you assumed as if this money was used from the beginning till end. And for the 12 months, you calculated the interest. Additional capital interest, you calculated from the date of introducing the additional capital till the end of the year. But sometimes what happens, you withdraw the money in between. The additional capital itself, you withdraw in between. So for the period of withdrawal, for the period that the firm has not enjoyed the capital, on that, why will the firm pay the interest? So here, you've calculated the interest from the beginning till end, from the date of additional capital to the end of the year. Now, in between, when you withdraw the money, on that part, the interest needs to be reversed. The interest on the drawings needs to be reversed. So which drawings are we talking about? Drawing against capital. So minus interest on drawing against capital. So whatever money is withdrawn into rate of interest, that is interest on capital divided by 100 into number of months by 12. This is one method. If you're not comfortable with this method, you can go with method 2. What is method 2? Event to event, from opening capital to additional capital. How much money used for how many months? Then from that date to next event, let's say drawing against capital. In that between period, how much money was used for how many months? So from one event to another event, you can calculate the interest. These are the two different methods. You are free to choose whichever is more convenient, comfortable, and the calculation which gets you faster the answer. You can choose that one in the examination. Am I loud and clear? So calculation part, interest on calculation part, do you have any trouble? Nobody's got any trouble. Wonderful. Now, in the last class, we agreed that this interest is calculated on the opening capital and not the closing capital. Sometimes the closing capital is given, opening capital is not given. So you have to derive the opening capital. You have to derive the opening capital. So now imagine you're trying to calculate the opening capital when the capitals are fixed. When the capitals are fixed. So now please tell me, how do you get the opening capital? Closing capital plus
Drawing against capital.
drawing against
Capital.
very good. Then minus
Additional capital.
additional capital. I'll get opening capital. In the ledger format, if you see, this is opening capital, this is additional capital, this is drawing against capital, and this is closing capital. With the opening capital, you would have added additional capital, you would have subtracted the drawing against capital to get the closing capital. Now, what are we doing? We're doing the reverse one, like in the cash flow statement. When we go reverse, you take the last item as a base, surplus as a base, closing capital as a base. And in this process, in the forward mechanism process, what and all you added, when we reverse it, we have to minus.
Minus.
That's what we did, minus additional capital. In this process, whatever we subtracted, while going reverse, we have to
Add back.
So whatever subtracted, we added back. So when we do the reverse process, where will we land up? If you go reverse process, where will you land up? To opening capital. But in this process, you have to take care of one thing. You need to add and subtract only those items. That is, with the closing capital, you will add or subtract only those items which were earlier added and subtracted with the opening capital to get the closing capital. One more time. With this closing capital, you will add only those items and subtract only those items to get the opening capital, which were used to add and subtract with the opening capital to get the closing capital. So sometimes it so happens that the question will tell you additional capital is 10 lakh, but they'll tell you the additional capital is not credited to capital account. Without crediting the additional capital, you got this closing capital. Opening capital minus drawing and closing capital, which means drawing against capital has been debited to your capital account. Drawing against capital is given in question, and they say that this has been debited to your capital account. Along with that, they give you additional capital, but they say in brackets this has not been credited to your capital account. So now my question goes to all of you: when you try to derive your opening capital, what will be a revised formula in this scenario? My question one more time. In the question, they are given closing capital. In the question, they gave you closing capital. In the question, they gave you drawing against capital. And they said you this has been debited to capital account. And they gave you additional capital, but they say you this was not credited to capital account. Now, in this case, what would be a formula for deriving the opening capital?
Closing capital plus drawing against capital.
Closing capital plus drawing against capital minus additional capital, sir?
No, sir.
Why minus you have not taken?
Not
This
credited.
is not recorded, which means to get this closing capital, you never considered additional capital. With opening capital, this additional capital is never added to get the closing capital. So while reversing it, why will I minus it? Correct? Got it? Very important point. This is very, very important. This is how they can twist and ask you. Clear this point? So here in this case, I will only add up drawing against capital and I'll get my opening capital. Be very careful with the language of the question. Now, how do we calculate the opening capital when the capital are maintained under fluctuating capital method? So closing capital, same thing is a base. Imagine all the debit side. All the debit part will be added. So in the capital account, fluctuating capital method, what and all do you think could be added?
Drawing.
So drawing against capital, drawing against profit, interest on drawing, share of loss. All these are debited to capital account. All these are debited means earlier subtracted from the opening capital. So while reversing it, we have to add it with the closing capital. Then we are supposed to minus those items which has been credited to the capital account. Add those items which has been debited to the capital account. So these 4 items too should be added. These 4 items should be added only if these 4 items are debited to capital account. True or false? One more time.
True.
Sir, with the closing capital, I will add these 4 items only if these 4 are debited to capital account. True or false?
True. True.
100% true. If anything is not debited, why will I consider it or why will I reconsider it? Debiting in the capital account means you are subtracting it. Only those items which is debited, only those items which are subtracted earlier, while reversing, we have to add back. Any problem?
No, sir.
Sir, here
Yes.
I minus some items. These are which item? These are those items which are earlier credited in your capital account. So in the capital account, what do you credit normally? Additional capital. Wonderful. Next. Salary, remuneration, commission, sir. Interest on capital. Share of profit. P&L appropriation account. Sir, all this we credit means earlier added. Now the reverse we have to subtract.
Minus.
Now in the question, if they tell you additional capital is given, additional capital is given in the question, but they told you this additional capital is not credited in the capital account. Without creating the additional capital, the closing capital is derived. Like that, if they give you the information while calculating the opening capital, will you consider here the additional capital?
No, sir.
Now understood? Anybody's got any problem here?
No, sir.
Wonderful.
No, sir.
No, sir.
So calculation part done, calculation of IOC done, calculation of opening capital done, and then journal entry, third part also taken care of. Now we'll directly go to one question, which is of Ann and Mohan, if I'm not wrong. That's a very tricky one, so let's do that. Before that, in this tabular column, one student had a doubt, so I thought let's clarify that and then we'll go to that question. The few cases that has been laid down in this tabular column, and what is the solution for it is what you have to tell me. When the partnership deed does not exist, or the partnership deed does not provide for interest on capital, that is one, the partnership deed itself is not there, or deed is there, interest on capital regarding point is that, but in that they forgot to mention the percentage. Give IOC you're telling, but percentage not mentioned means how, what will I give? It's a question mark still there, no? So whenever there's a question mark, then what are you supposed to do with interest on capital? Sir,
Not allowed.
no interest on capital. No interest on capital. Interest on capital is not allowed. Okay, wonderful. When the partnership deed provides for interest on capital, but it is silent on whether it is a interest, whether the interest is charged or appropriation. The partnership deed says give interest on capital. How much percentage also, that is specified, but they have not specified whether it is appropriation or charge item. So always when the question is silent or the deed is silent, whether it is appropriation or charge, always it is appropriation. Now here 3 cases. First case, in the P&L account is a loss. You're transferring the loss to appropriation account. In that case, will you give IOC?
No, sir.
In case of loss, we will never record the items of appropriation at all. When loss is there, only one thing you record.
Interest on drawing.
Interest on drawing. That too, if it is there, otherwise that also will not record. So yes, in the situation of losses, interest on capital not allowed. Situation 2, profit before interest, that is profit before distributing interest on capital is equal to or more than the interest. Either it is equal to interest or more than interest, which means I have sufficient profit to pay my interest on capital. Look at the language. Profit is equal to interest on capital, or profit is more than interest on capital. Means I can comfortably give the interest on capital. Give it away. What is wrong in that? So interest on capital is allowed at the agreed rate. As per the rate, whatever interest comes, that much profit you have, give it. You have extra profit, give it. After paying interest on capital, if the surplus profit is there, that is called as net divisible profit or net distributable profit, which you distribute in the profit sharing ratio. This is situation 2. So in situation 2, 2 of our cases has been included. We have 4 cases, no? Case 1, 2, 3, 4. Case 1 is what? Profit is more than item of appropriation. This is case 1 for us. Then profit is equal to item of appropriation. Case 2. Then what is case 3? Profit is less than item of appropriation. This is case 3 for us. And case 4 was?
Loss.
Loss. So case 1, 2 and 4 we have done. Now come to case 3. What is case 3? So profit before interest is less than the interest. In other words, the net profit is less than the interest. I don't have sufficient profit to pay the interest on capital. The 2 people to whom I have to pay interest, but I don't have the sufficient profit. So what they said, interest is allowed only to the extent of profit in the ratio of interest on capital of each partner. Now people is where here they're getting confused. So you said Here, in the case when the profit is less, item of appropriation is more, you have to distribute the ratio of appropriation. But here, what are they telling? They're telling us to distribute the ratio of interest on capital. Now, how many of you have confusion and doubts here? Please raise your hands. One. If those who are not raising your hands, no, I'll ask the question. So to be on safer side, you raise your hand. That yes, I have doubt. For those who don't have doubt, I'll ask the question. Are you clear with the doubt? What is the point here? What did we say? Whenever the profit is less than the item of appropriation, the profit should be distributed in the ratio of appropriation. Here they're telling to distribute in the ratio of interest on capital. So there one information, here one information, sir. I'm getting confused. Like that, how many of you are getting confused? Raise your hands. Now 3-4 hands came. Very good. So this raising hands is because I'm going to ask a question you are not able to answer. For that you're raising the hands or genuinely have doubt? Genuinely have doubt. Okay. Others who didn't raise the hand, can you please give me the explanation for this?
Sir, both are the same, sir.
One second. One second.
Let's just assume you only have interest on capital and nothing else, no salary, no revenue. You get the amount, that is the ratio of appropriation.
Yes. Now here, yes, offline people got it. This point I explained very clearly in the regular class also. For those who don't listen, one more time I'm telling you. This tabular column is particularly focusing on only interest on capital. According to this tabular column, in that appropriation account, there is no salary, no commission, nothing else. So please tell me, I'll give you one practical insight itself. 1 lakh capital, 10% interest. How much it is?
10,000.
2 lakh capital, 10% interest. 20,000. Okay. So this is the total appropriation item. The profit that is available is 15,000. Profit that is available is 15,000. Now what do? You prepare a tabular column. IOC is equal to, for A and B, how much? 10,000 is to 20,000. Correct? Here there is no salary, no commission, nothing is there. So now, what is the ratio of appropriation?
1:2.
10,000 is to 20,000, which is nothing but 1:2. Now, what is the question saying? Interest is allowed only to the extent of profit. Correct? I'll give interest to the extent available profit, obviously. But in what ratio? In the ratio of interest on capital of each partner. In the ratio of interest on capital. This is interest on capital. In this ratio only we gave you. So this 1:2 is nothing but ratio of appropriation, and also this itself is ratio of interest on capital. This statement, the statement that these both are true, that is ratio of appropriation is equal to ratio of interest on capital, is true only when in the appropriation table you have IOC only. So ultimately here also they're telling ratio of appropriation only. Here there could be a better choice of words. They could have used a better choice of words, telling that in the ratio of appropriation they could have mentioned it, because they have themselves given in the earlier question that whenever the profit is not sufficient, distribute the profit in the appropriation ratio. So they could have used the word ratio of appropriation. So when they use the word ratio of interest on capital, people got confused. Both are same. In this question, in this particular tabular column, they're only focusing on IOC. They never focused on commission remuneration. So obviously, when you prepare the tabular column, the ratio of appropriation is going to be equal to ratio of IOC. When will the ratio of appropriation not be equal to ratio of IOC? When you have other items such as commission, salary, etc., etc. Now, are you clear with this point?
Yes, sir.
Anybody's got any problem here?
No, sir.
No, sir.
Am I a good teacher?
Yes, sir.
Nobody's appreciating me. See, offline people, everybody's silent. Either you guys are shocked with the answer what I gave, or not impressed with my answer. One more time. Am I a good teacher?
Yes, sir.
Yes, sir.
विक्रम नहीं बोला मुंह खोल के, नहीं बोला तो मैं गट्टी कर सकती. Third point, the partnership deed provides for interest on capital as a charge goes to a P&L. Interest on capital is allowed whether the firm has earned profit or incurred loss, doesn't matter. Easy one. 19th question, I don't think so there's any problem in that. Which question is that, Anand and Mohan?
25.
5. Is this revision class helping all of you?
Yes, sir.
Helping, I'll continue, or else you can study on your own. This is like घूर रही है मेरे को क्या मजा आता है others worth okay. No, in regular intervals if you motivate only then I'll be having the interest to take the class. No, where else why will I take the class? Anand and Mohan, a partner sharing profits and losses in ratio 3:2. The firm maintains fluctuating capital method, fluctuating capital accounts, and the balances in their capital account as on 31st March 24 was 31st March 24 was 4,350,000 respectively. Looking at the date 31st March 24, do not conclude this is closing balance. Let's say the current financial year is 24-25. Opening capital could be as on 1 April 24, or it could be also on 31st March 24. Previous year's closing balance is current year's opening balance also, no? So be very careful when they give the year. Immediately check which financial year we are falling into. Looking at the date 31st March, never conclude that this is the closing balance. Closing balance of previous year is the opening balance of current year. So it could be deceiving at times. So be very careful. Always look for the financial year. Sleep nicely, all of you. Sleep nicely. Now, the capital is 4 lakh and 3,50,000 respectively. That is, An's capital is 4 lakh and more is 350. Drawings during the year is 75,000 each. Should I multiply by 12?
No,
So
sir.
this is the total drawing of the entire year. They never say 75,000 per month. But 75,000 each means what? 75,000 for An, 75,000 for Mohan. So total drawing put together is how much? 1 lakh?
1,50,000.
As per partnership deed, interest on capital at 10% per annum should be calculated on the opening capital, which had been allowed to them. And it has been allowed to them. As per partnership deed, interest on capital 10% per annum on the opening capital had been allowed to them. Okay. Calculate the opening capital of the partners. Calculate the opening capital of the partners, which means the capital what is given to you is not opening capital, it is closing capital. Second, the financial is 23-24. So it ends with 31st March 24. So now we can conclude that these capitals are closing capital. Calculate the opening capital of partners that net profit during, and the net profit during the year is 225. The profit that is coming from the P&L is 2,25,000 rupees. Wonderful. So this entire question is focusing on the calculation of the opening capital. Any problem?
Sir, appropriation account.
Why do we have to prepare appropriation account? Appropriation account? No. Appropriation account, when are you supposed to prepare? If required as a part of working note, you will do it. Otherwise, not required. So now, I'm coming. I'll solve it. Now, guys, they want opening capital. Now, please, my question goes to all of you. Which method of capital account are they maintaining? Fluctuating method. Wonderful. So now, heading, please. Calculation of opening capital. Particulars on Mohan. Capital as on 31/3/24. Closing capital. How much is for An?
4 lakh.
4 lakh. How much is for Mohan?
350.
3,50,000. Now, you have to add back all those items which has been debited to the capital account. So please go through the question and tell me which are all the items that has been added to the capital account. Sorry, which are all the items that has been debited to capital account?
Drawing.
So drawings is given. Drawings during the year is given. My question goes to all of you. Drawings they have mentioned, but whether it is against capital or profit not mentioned. So whenever the question is silent about the mode of drawing or the type of drawing, it is always drawing against profit. So this 75,000 is drawing against profit. Anywhere in the question did they tell you this drawing is not been debited to partner's capital account? Nothing is mentioned. Means this drawing has been debited to partner's capital account. If anything is debited to partner's capital account, we have to reverse by
Adding back.
Add drawings against profit. Any problem? 75,000 each, they're telling. 75,000 each. Wonderful, sir. Any other item to be added? In the question, have they given you drawing against capital? No. Interest on drawing? No. Share of loss? No. So in the capital account, I think this is what has been debited so far. Okay. Now, you identify those items which is being credited in the partner's capital account. So which are all the different items that has been credited to partner's capital account? Please tell me.
Interest on capital.
Salary, commission, remuneration? No.
Profit.
Interest on capital? Yes. interest on capital on the opening capital has been allowed to them. Anywhere in the question did they say that IOC is not being calculated, not been credited? No. If the question is silent, it is credited. So IOC they have credited. Then share of profit they have credited. So these two items I have to reverse, subtract. Anything which is credited, I need reverse by subtraction. Credited item is earlier added to opening capital. So while reversing, we have to minus.
Minus.
We have to minus. So minus less interest on capital, or less, first we'll do share of profit. Less share of profit. Leave some two lines, then less interest on capital. Please tell me, what is the individual share of profit that has been credited? What is the individual share of profit that has been credited? During the year, the net profit is 225. Net profit is 225. That is in the appropriation account, 225 is net profit. From this, first you're given IOC. Then balance money is nothing but net divisible profit. So what is the net divisible profit, you tell me? Always share of profit means the net divisible profit that has been distributed. So what is the net divisible profit that has been distributed? Sir, it is not given directly. How much share of profit individually? Not given. Try and see. Nowhere in the question they have told this is the net divisible profit. Instead of 225 net profit, had they given net divisible profit, then obviously this would have distributed in what ratio? 3:2. Very easy for me to find out. But what happened here? They have not given the distributable profit. They have given the net profit. And this net profit does not go to your partner's capital account individually, boss. Because from this, IOC is gone first. And then the remaining profit is distributed in the ratio 3:2. Chalo, in that case, then I have to first look for IOC. Tell me what is the individual IOC? Sir, individual IOC also question they have not given. We have to calculate. To calculate individual IOC, I have depend on opening capital. And to calculate opening capital, I have depend on this
IOC.
Govinda, oh Govinda. Now, apply your mind. What could be done? Now, you cannot individually calculate it. So now, the only way is add all these items. Individual data of Ann, individual data of Mohan. After a point, I don't have it, boss. But I have a cumulative data. So what am I doing? I'm adding the total closing capital. So 4 lakh plus 350. What is my total capital?
7,50,000.
7,50,000.
Anybody's got problem in totaling this?
No, sir.
No, sir.
What is my total drawings?
1,50,000.
150. Now, total share of profit and total IOC. Do we have total share of profit and total IOC? No. But one thing is very clear. If these both I add, this is nothing but
Net profit.
profit. If you don't believe me, look at the P&L appropriation account. What is the profit? Net profit?
2,25,000.
There will be some amount of IOC. And whatever is the remaining amount, it goes as the net divisible profit. So, in mathematics, this side is left hand side, this side is right hand side. In center line is like equal to. So, interest on capital plus net divisible profit is equal to net profit. I don't have the total share of profit and total IOC individually. This left hand side information separately I don't have. IOC for Ann and Mohan so much. Net divisible profit for Ann and Mohan so much. Individually I don't have. But I have total. This 225 is nothing but the entire net profit gone to partner's capital account. So now what I'll do? I'll minus the entire net profit. Minus 2,25,000. This minus has got two components. One is IOC. Second is share of profit. And I don't need it individually now. If I take the overall basis also, I'm good to go with. Because with the total closing capital, if you add total drawing and minus total credit side, which is share of profit and IOC together, I'll get total opening capital. I'll get the opening capital in the totality. So please tell me, if I minus 225, what do I get?
6,75,000.
6,75,000.
6,75,000. And I call this as total opening capital. I call this as total opening capital. That is opening capital of Anand and Mohan both put together is 6,75,000. Now please tell me, do you have any difficulty in deriving this 6,75,000?
No, sir.
First step was a failure. Individual share of profit for Anand Mohan, individual IOC I could not derive. This is my first failure. Second failure, I tried to get total individual share of profit and total individual IOC. That also it was a failure. But I knew that share of profit and IOC put together is equal to net profit. And that net profit is available. What if I don't get the separate information to be subtracted, but I have the total information of either 225 is split in two parts and minus, or cumulatively you minus, both at the end, it's the same answer. So now my total opening capital is 675. Okay. With this 675, can you do something? Sir,
Yes.
with this total opening capital, I can calculate the total interest
on capital.
I can calculate the total interest on capital. So now, working note number 2. Or this is first working note. Or else what you can do, you can take this part, the entire part is there, no? You can take this as a separate working note. Working note 1, calculation of the total opening capital. You can take this as a separate working note. Working note number 1, calculation of total opening capital. Do it separately. Don't do like this. Here I did together to make you understand the concept. But exam, you can do this entire tabular column, no? This entire column. You can do it separately. And the heading will be what? Working note 1, calculation of total opening capital. Now, working note number 2, calculation of total interest on capital. I'm not getting individual IOC. I'm getting the total IOC on both the partners. Now, please tell me, interest on capital is equal to what is opening capital? What did you calculate as opening capital? 6,75,000. This is opening capital. In the question, have they told you anything as additional capital? Any drawing against capital? Nothing, sir. So into rate of interest is how much?
10%.
10 by 100. So how much is your total interest on capital? 67,500. Any problem?
No, sir.
Now working note 3. Calculation of net divisible profit. Calculation of net divisible profit. So please open the P&L appropriation account. What is the net profit?
25.
2,25,000 by net profit 2,25,000. To IOC, what is my total IOC?
67,500.
I don't have it individually, boss. I don't have the individual IOC, but I have total IOC. And that total is good enough for me to calculate my net divisible profit. So from 2,25,000, if I give 67,500 to partners as IOC, Pritesh, please tell me, what is the balance net divisible profit?
1,57,500.
1,57,500.
500.
This you give to whom? To An's capital, to Mohan's capital in the profit sharing ratio, which is 3:2. So please split this 157,500 in the ratio 3:2.
94,500.
94,500. 10.
63,000.
63,000. Now I've got, guys, individual. With the help of working note 3, we have got now individual share of profit. This is nothing but share of profit individually. So 94,500, 63,000. Please come and substitute it here. Minus 94,500 and minus 63,000. Please tell me what is the answer here.
$3,80,500.
3,80,500. And for the one?
3,62,000.
3,62,000. So this is nothing but, people, can I say 380,500 is opening capital plus interest on capital put together? From this, if I minus interest on capital, I should get my opening capital. Do you agree with this point?
Yes, sir.
This answer what you've got here, people, is nothing but it's a sum total of two amount. This 385 has got two components. One is opening capital. Second is interest on capital. On this, if I minus interest on capital, I'll get the opening capital. Any problem here?
No, sir.
Now the question is, how do I get the individual interest on capital? So there's no information given. So now you have to follow vegetable vendor technique, extraction process. How, sir? Very simple. Remember the manager's commission. Manager's commission.
Yes.
Which scenario, sir? Then after scenario, We got the same scenario here. Think about it. This 380,500, from this if I minus IOC, I get OPC. To calculate IOC, I've depended on OPC. And to calculate the opening capital, I've depended on IOC. We're stuck in a vicious circle. Whenever we're stuck in a vicious circle, what are we supposed to do?
OPC
Include that percentage ka column. Always this will be equal to
100.
100%. Interest on capital, what percentage?
10%.
10%. Now please tell me, with this, what? How much if I minus, or if I minus 10, or to get this 100, sorry, to get 100 with opening capital, how much if I minus, I'll get the opening capital?
110.
110. With 110, if I minus 10, I'll get 100. This 380,500, 3,80,500 is equal to 110%. In this 3,80,500, we have two components. 100% of this belongs to owner and 10% of this belongs to owner as IOC. In this 380,500, this 3,80,500 is got two components. One component of around 10% will go to partners as IOC, and another component of 100% profit will go to the partners as share of profit. Whenever you give the share of profit to the partners, always it will be 100% profit. Let's suppose you earn a profit of 100 rupees in your business. Will you distribute 99 rupees or will you distribute entire 100 rupees? Entire 100 rupees, no. 1 rupee, where will you leave? For God, huh? So always the divisible profit will be equal to 100%. So now this 385 is equal to 110%. Then for 10%, how much is the proportionate value? Cross multiply. So it is 3,80,500 into 10 by 110. So this 3,80,500, when you divide by 110, you're breaking this into 110 parts. I want 10 part ka value, so multiply by 10. If you want 100 part ka value, multiply by 100. If you multiply with 10, you get this value. If you multiply with 100, you'll get this value. Try and see. 380,500 divided by 110 is how much? 380,500 divided by 110 is how much? Or else 380,500 divided by 11 also you can do. Which is more convenient? 34? 599. 590.9. So 591. So 34,591. So what is my opening capital? 3,45,910. Sorry? 909. 909 round off to 910, no? 909. 09 round off to 909 only. Okay. Okay. Opening capital you got? Now, opening capital 3,45,909 into 10%, I'll get how much IOC? 3,45,90.9, which is 91. Same answer you got it. This is just to cross check. 0.5 and above, you have to round off to next number. Up to 0.4, you can have the same number. For example, 31.5 to 31.99 will be rounded off to 2, 32. This is called as round off. This is called as round off. 31.01 to 31.49 will be 31 only. This is the rule of round off. This is the rule of round off. Got it? Any problem in this? Similarly,
No,
try for the other partner, Mohan. Please try it. Same strategy. Same strategy. This amount will be always equal to 100%. This is
10%.
10%. And this will be
110.
110%. If 362 is equal to 110, then for 10, how much? 30? 909. So 910. 909 after rounding off. Okay. What is opening capital? 329. 091. That's all. Any difficulty?
No, sir.
You can ask me if you have any doubts. This is indeed a tricky question. Hence, I did in the revision also. Please tell me if you have any doubts here.
No, sir.
This process of calculation is called as extraction process. From this amount, we're extracting IOC. This is also called as grossing up. This is also called as grossing up method. Very commonly used in CA. This is not a CA method, by the way. It's there in your textbook itself. 385 into 10 by 110. It is just like a given elaborate explanation. Any problem?
No,
To
sir.
sum up, we started with this question. We recorded the individual closing capital. We recorded the individual drawing, but we could not find out the individual share of profit and individual IOC. So therefore, what is the next step? To prepare working note 1. But instead of getting the opening capital individually, we thought of getting the opening capital cumulatively. So we added everything. And by that virtue, we got the total opening capital. That was our first step. Working note 1 to calculate the total opening capital because we couldn't get the individual opening capital. Once we had the total opening capital, with that we multiplied the interest on capital percentage. We got a total interest on capital. So second working note, calculation of total interest on capital. Third step, what did we do? We calculated the individual net divisible profit. So we prepared a P&L appropriation account. From the total net profit, we subtracted total IOC so that we got total net divisible profit. And now in the question, they gave you 3:2 ka share. So it is very convenient for us to split it. So now working note 3 helped us to fetch individual share of profit, which we came and substituted in this question. Which means till this stage, we conveniently solved it. But after this, we could not move further because individual interest on capital was not given clearly in the question. And there's no method to calculate it as well. Hence, we had to adopt the grossing up method or the extraction method. So through this, we got the individual opening capital. Any problem in this?
No, sir.
No, sir.
Offline people, any problem? Loudly say yes or no.
No, sir.
Any other question that you want me to work out in the context of interest on capital? Is there any other question that you want me to work out in the context of interest on capital? I'm talking about the illustration.
No, sir.
I've jotted 1 or 2 questions which I would do it. Not now, at the end. Yes. If all of you clear with this point, then we can head forward to the next concept, which is interest on partners drawing. And for that, we'll take a small break of 3 minutes. We'll come back and continue. Thank you. Yes, people, welcome back from the break. So let's continue with the next concept, which is interest on partners drawings. Guys, drawings is of 2 types. One is against capital. Second is against
Profit.
profit. Drawing against capital is nothing but the amount of capital that you have contributed. That capital you're withdrawing it. So whenever the capital is withdrawn, the intention is to never give this money back again. So it is withdrawal of the capital. It is withdrawal of the capital. Now, drawing against capital is an item that is already adjusted in your calculation of IOC. Remember, in method 1, you calculated the interest on opening capital. With that, you calculate the interest on additional capital. And whatever money withdrawn on that interest is there, no? That you are subtracting from the drawing against capital. Are you able to follow? So now, interest on opening capital, interest on additional capital. This is the money that the partner has given to the firm. So who has to pay interest to whom?
Firm.
Firm has to pay interest. Firm has to pay interest to the partner.
Partners.
So here what has happened? Firm has given the money to the partner. Partner is withdrawing the money. Correct? Who has to pay interest to whom? Partner. Now what firm is saying? Firm is saying I have to give interest on opening capital and additional capital. Whatever interest I'm going to give you on the capital, you are withdrawing the money against it. You have to pay me interest because here the firm is giving the money to partner. So partner has to pay interest. So firm is saying that whatever interest I have to pay you, whatever interest I have to pay you on the opening additional capital, from that I'll minus the interest what you have to pay me on the drawing against capital. So here the interest has been already netted off. Here the interest already been netted off. I'll be able to follow. So here, whenever in the question drawing against capital is given, on that will you calculate the IOD separately? Not required.
No.
In the IOC itself, the calculation has been taken care of. So IOD is coming. IOD as a concept is coming exclusively under in the concept of drawing against profit.
Profit.
This drawing against profit we cannot adjust against capital. Hence, for the money that is withdrawn from the business, we have to calculate the interest on drawing separately for it. Now, the question that arises is that why is there an interest on this? And what is the meaning of drawing against profit? Drawing against capital is understandable. Sir, I gave the capital. That capital I withdrawn from the business. So drawing against capital is understandable. But it's drawing against profit. So all of you know that the accounting happens on day-to-day basis. Accounting entry, journal entry, ledger happens on day-to-day basis. So from 1 April to 31st March, you keep on doing the accounting on routine basis. 31st March, is your accounts 100% ready?
No.
Is your accounts 100% ready to an extent where the profit is finalized and now the partners can withdraw the profit? To that extent, is the profit ready? No.
No.
Because after 31st March, you will need additional couple of days. Additional couple of days, depending on how big your company is, depending on how big your accounting team is, you need additional 15 days, 30 days, 45 days, 60 days. Why? In this period, you are going to finalize the accounts. You have to finalize the accounts. So what is the meaning of finalization? After the basic accounting entries, which is passed from 1 April to 31st March, there are certain adjusting entries that has to be done. So during this period, you will do the adjusting entries. So adjusting entries for what? Adjusting entries for closing capital. Sorry, adjusting entries for closing inventory, closing stock. Adjusting entries for outstanding expenses, prepaid expenses, accrued income, unearned income. Adjustment entries for interest on capital, interest on drawing, interest on loan by partner, interest on loan to partner, depreciation. Like there's so many adjustments you have to do. Rectification for any others done, rectification. All this drama happens during this period. Only when this all adjustments and rectifications are done, only then your accounts has been finalized. Only then you get to know your final profit. Only then you get to know final profit, and then after that you can withdraw the profit from the business. So typically a partner who started the business has to wait 12 months here to get the profits, and here nearly about 2 months. So roughly he has to wait for 14 months to get his profit home. Until then, how will he manage his day-to-day expenditure? Maybe one of the partners filthy rich. He doesn't need the money from the business. He's got multiple sources of income, so he's able to manage his house. But not every partners are like that, no. So there are 3 partners, A, B, C. C is coming from a background where he does not have any other source of income. He's only dependent on the income of this firm. That is profit, whatever is getting home, no, that is a profit is relying on. So now he says that like A and B, I cannot wait for 14 months to get my profits. Profit, when I talk about, I'm not talking about only net divisible profit. Please understand. 14 months you have to wait to get your item of appropriation. That is, C can get profits in form of salary, commission, remuneration, IOC, then share of profit. For all of these, he has to wait for 14 months. Are you able to follow? So now we cannot wait for 14 months. So what does this person do? He does the drawings on monthly basis, or he will do drawings on quarterly basis, or he will do the drawings on half yearly basis. Means what? He cannot wait for 14 months. He will request the other 2 partners, please allow me to withdraw this money in advance. Please allow me to withdraw this money in advance. This is called as drawing against profit. This is called as drawing against profit. Profit here does not mean share of profit alone. It includes all the other items of appropriation also. Am I loud and clear? So this money, when you withdraw in advance, now the context of or the concept of interest on drawings comes into picture. Tell me why. If C is continuously withdrawing the money, and if for this C is not paying interest, a point will come in future where today A and B is okay to give that money to C in advance. But after a point, there will be conflict. Now, later B will start asking the money. I can run my business. Sorry, I can't run my household expenditure. So please also give me like C monthly so much of money. Like that, then later A also will come and ask. So the business money, if it has been withdrawn like this in advance, because when you're withdrawing the money in advance, please understand, you're estimating the profit and you're withdrawing that money. What if the real profit is not that much? Let's say C throughout the year withdraw 10 lakh rupees. But the actual total profit is 10 lakh itself, which has to be split equally between all the three partners. Let's say 12 lakh rupees. So how much is individual partner share of profit? 4, 4, 4. So C is supposed to get only 4, but he's withdrawn 10 lakh. Possible or not possible? Because every month when you keep on withdrawing, how do you know that this is the exact amount of profit you'll get in future? Future is unpredictable. In 12 months, how I'll do business, nobody knows. But you withdraw the money constantly every month. So there could be a situation where you'll end up drawing more money than what it is supposed to draw. So if C enjoys more money and A and B are sitting quiet looking at it, is it possible? A and B will definitely start fighting, or they will start withdrawing the money. So if you start withdrawing surplus money, where C is supposed to get only 4 lakh, but he withdrew 10 lakh. So extra, how much money he withdrew? 6 lakh. Had that 6 lakh been in the business could have grown further, right? But because of withdrawing the extra 6 lakh rupees, the business is losing the money of expanding the business. Likewise, imagine if B and A also starts withdrawing the money. 6 lakh, 6 lakh, 6 lakh extra. 18 lakh gone away from the business boss. How will I grow the business? Hence, a penalization is done. Hence, a penalization is done on the partners for the drawing. If I charge interest on this, he will withdraw only that much as much he wants. He will withdraw only that much money as much he wants. Because if he withdraw extra money, he has to pay interest. So he will withdraw only that much money, how much he wants at home. First point. Second, if the interest on drawing is charged, the second advantage is that A and B will not feel bad. Because here C is enjoying the money in advance. Whereas A and B are getting the money at the end of the finalization. A and B have to wait 14 months to get the profit at home. Whereas C is getting every month. So today A, B are okay with it. Tomorrow A and B will not be okay with it. There will be a conflict. They will stop C from withdrawing the money. Then C will say, what man, so far you allowed me, now you're asking not to withdraw. How is this possible? How will I take care of this? Blah, blah, blah. There'll be a conflict arising. Now, why should a conflicting point come? Better you ask C to pay interest. When C is paying the interest, on that interest, A, B will also get some share. Because interest on drawing is income for the firm. And whatever the final income comes, it gets distributed to all the three partners. So if A and B is getting something out of this drawing against profit, why would A and B go and poke C unnecessarily? So that way, the conflict also could be resolved. That is how the concept of interest on drawing was introduced. Two reasons. First reason, to ensure that the C does not do excessive drawing. So we are imposing penalty on him in form of interest on drawing so that he'll withdraw only as much he needs. Second, when he pays interest, it is income for the firm. And that income is distributed between all the three partners. So A and B are getting something in return for allowing C to enjoy that money in advance. So these are the two reasons why the interest on drawing concept is coming into picture. Any problem?
No, sir.
No, sir.
Now, there are three methods for calculating interest on drawing. My question goes to all of you. Okay, let's discuss about the three methods first. The three methods. One is simple method. Second is product method. Third is average period method. For a given question, you can solve the interest on drawing using all the three methods. For a given question, you can solve the interest on drawing under all the three methods. And whatever answer you get under each method, the answer will be same with that of the other method also. Which means, for a given question, if you try to solve the question using simple method, you'll get an interest answer, no? Interest on drawing. The same answer you'll end up getting in the product method and average period method also. But there are few conditions to it. Before that, let's talk about simple method. As the name goes, the calculation is very simple, but the procedure is very lengthy. Here in simple method, you're supposed to calculate the interest on drawing for every single drawing. For example, if you take page number 1.43 people, 1.43. If you look at this question, there is this particular partner who's withdrawing 2,000 rupees on 1st May. He's withdrawing 5,000 rupees on 1st August, 2,000 on 30 September, 6,000 on 31st Jan, and 2,000 on 31st March. In simple method, if you are going to calculate this, you have to calculate the interest on drawing for every single drawing independently. What is the formula for that? So for this 2,000 rupees, you have to calculate separately. What is the formula? So amount of drawing. Amount of drawing, how much it is? 2000.
2000.
Into rate of interest, 15%. Rate of interest by 100, which is 15 by 100. Into number of months by 12. Guys, this person is withdrawn the money on 1st May. Means he's enjoyed this money for the entire May. So May, June, July, August, September, October, November, December, Jan, Feb, March. So this partner has enjoyed this advance profit for 11 months. He's enjoyed this money for 11 months. So he has to compensate us for 11 months. So into 11 by 12, you get 275. Likewise, you have to do the repeated calculation for each and every subsequent drawing. So let's take another example. You return 5,000 rupees. The same person has returned 5,000 rupees on 1st August. So what is the amount of drawing? 5,000. Rate of interest by 100 is 15 by 100. How many months did he enjoy this money? Sir, August, September, October, November, December, Jan, Feb, March. So into 8 by 12. You'll get how much? 500. This is the same way how you calculate the interest on capital. This is the same way how you calculate interest on debentures. This is the same way how you calculate interest on loan by partner and loan to partner. Same method, simple method. Everyone knows this concept. Everyone knows this concept. This is simple method. Any problem?
No, sir.
What is the formula under simple method? Amount of each drawing. Amount of each drawing into rate of interest by 100 into number of months divided by 12. If it is in days, number of days divided by 365. Any problem?
No, sir.
Now, the second method is product method, which is a better version of simple method. Simple method is a bit time consuming. To save time, the product method was innovated. It is just a mathematical way of, changing the formula. The concept as such, the interest calculation as such, it's not undergone a change. Mathematically, there's just a small twisting here. So what twisting? Very simple. Please tell me, we applied this formula on the two amounts. Please tell me, in these both scenarios, which was that part which was getting frequently repeated? So this 15 by 100 is getting frequently repeated. Amount of drawing is not getting repeated. Amount of drawing here is 2,000 different, and here 5,000 is different. I'm telling you, in both of these, which is got commonly repeated. So the rate is got commonly repeated, and then the 12 months is got commonly repeated. Which was that thing which was changing again and again? Sir, amount was changing, sir, and the number of months was changing. Correct? So what they did is, these both amount they multiplied and brought it outside. So what is the original formula? 2,000 into 15 by 100 into 11 by 12. This is the original formula, no? What they did is, this 2,000 and this 11, they multiplied together. They multiplied together and brought it outside the bracket. So now tell me, how does the mathematical formula from here continues? So this part will be as it is, into 15 by 100 into 15 by 100
1 by 2.
into
1 by 12.
1 by 12. Got it?
Yes, sir.
Now what happened? In the second question, what is changing? So 5,000 will change, 8,000 will change. So 5,000 into 8 into 15 by 100 into 1 by 12.
1 by 12.
Then 2,000 into 6. 2,000 into 6 into 15 by 100 into 1 by 12. Then 6,000 into 2. 6,000 into 2 into 15 by 100 into 1 by 12. In this, what is getting again repeated? So this entire thing is getting repeated. So what product method suggested? Sir, we will multiply these both items. We'll multiply these both items and we'll get a total. We'll get a total of this. So 2,000 to 11, I'll get one value. Plus 5,000 to 8, I'll get one value. Plus 2,000 to 6, I'll get one value. Plus 6,000 to 2, I'll get one value. That value will be called as total product. So they have given a separate format. People get confused over such a big format they've given. Donkey fellow, nothing they've done. The same formula they have done, just simplified it mathematically. 2,000 into 11, 5,000 into 8, 2,000 into 6, 6,000 into 2. You get 4 amounts. For total, I'll get 86,000. So I'll get 86,000. I'll get 86,000. Now, in this entire calculation, these points were common, no? What will you do? Just put one time here, 15 by 100 into 1 by 12, game over. So in the entire formula, this amount of drawing and number of months was different. Rest all component were same. So what they did, these both they multiplied and they called it as total product. And rest of the thing they kept it as it is, rate of interest into 1 by 12. So this part you just have to do it once, where under product method. Whereas under simple method, into ROI by 100 into number of months by 12, you have to do it for every single drawing. So again and again it was getting repeated. It was more time consuming process. It was a time consuming process, and hence a product method was introduced. This is nothing but a time saving method compared to simple method. So this product method formula is extracted from simple method only. It is extracted from simple method only. It is just a twisting in the formula that has been done. Any problem?
No,
So
sir.
here, total product into rate of interest by 100 into 1 by 12. How do you get total product? Amount of drawing into number of months. Amount of drawings into number of months. So what are they supposed to do for that? It is always advisable to prepare a tabular column. Date of drawing, amount of drawing, and how many months total, and product. That is amount into number of months. If I do, I get product. 4 columns. Any big difficulty to remember? First column is date of drawing. Second column is amount of drawing. Third is number of months for which you enjoyed the money. Second and third column, B and C column, you multiply, you will get the column D, which is product. Total the product. On that product, multiply rate by 100 into 1 by 12. And surprisingly, you will get the same interest on drawing what you got for the previous method. Any problem under product method?
No, sir.
No, sir.
Very less chances of this simple method or product method being asked, because here the highlight is the third method. High chances of only average period method coming in exam, but in case if they ask to a surprise, then you should not be getting stuck there, because only one question is there based on this. So please be aware of this. Yes.
31st March को drawing हुआ था, बड़ा drawing कर रहा है, तो profit तो वो साल में से जाएगा, तो next year pay करेगा तो previous year का profit का pay करेगा.
Well, the question what Takshil is asking is 31st March, end of the year, he is withdrawing the money. He is withdrawing the share of profit. Now, on this, will the interest come? That question is the interest will not come, because the interest is being charged only for the period the money has been enjoyed by the partner and suffered by the firm. Throughout the year, the firm has enjoyed that money, which is being invested in the business. So at the end of the year, if the person is withdrawing the money, for that year, you will not charge the interest. You will penalize him for the next year. Because had he not withdrawn on 31st March, next year also the business will have used that money. But next year, the business is losing the opportunity of using that money. Hence, the firm will penalize the partner and the firm will ask the partner to pay the interest from the next year onwards.
But profit to पिछले साल में
doesn't matter. See, it's not about the profit of which year it is. It is basically a scenario when the money has been withdrawn. Now imagine the profit has been withdrawn after all the profit has been finalized. Then you will not term that as drawing against profit. You will term that as withdrawal of the profit. Withdrawal of the profit means what? The partner is withdrawing the money. Once the share of profit is been recorded in your capital account, what entry? P&L appropriation to A's capital. Once that entry is done, then you withdraw. To the extent you are allowed to withdraw, then no problem. But when you withdraw more than the amount you are supposed to withdraw, on that the drawing will come in the next year. Am I loud and clear?
Yes, sir.
Now, the next method that is coming into picture is average period method. Average period method is a better version, improvised version of the product method. It is going to save more time compared to simple method and product method. But for anyone to use this method effectively, there are 3 conditions that you have to fulfill. There are 3 conditions that you have to fulfill. All the 3 conditions have to be fulfilled. If any one is violated, you cannot use the average period method. One more time I'm telling you, listen to me very carefully. Average period method is a better version of simple and product method. It is way more time saving than the product method. But for you to use the average period method, there are 3 conditions that has been laid down. All the 3 conditions cumulatively needs to be satisfied. Only then you can use the average period method. If any one condition also fails, you cannot use the average period method. Then you have to use either simple method or the product method. So 3 conditions, please. What are the 3 conditions? Amount of drawing or withdrawal should be same.
Same.
Plus date of drawing, date or frequency of drawing should be same. Plus date of withdrawal A by interval interval between subsequent drawing should be same. Sir, example, sir. Amount of drawing should be same means that when the partner is withdrawing the money, whenever he is withdrawing, in whatever intervals he is withdrawing, but every time when he withdraws the money, he has to withdraw same amount of money. If X is withdrawing if X is withdrawing 5,000 rupees, means he has to withdraw every time 5,000 rupees only. The amount of drawing should be same in all the drawings throughout the year. Second, date of drawing or the frequency. If I have withdrawn the first drawings on the first of a month, I should withdraw on the first only. If I'm withdrawing any money on the first of any month or first of any quarter, I have to withdraw only on the first. If I'm withdrawing any money in middle of any month, 15th, or middle of any quarter, or middle of any half year, I have to withdraw in the middle part only, not beginning or end. If I am having the habit of withdrawing the money at the end of the month, let's say 31st or 30th of the month, every drawing should be withdrawn on 30 or 31 only. One drawing you're done on first, another drawing on 15th, another drawing on 30th of some month. Different month, different date, which means the second condition is violated and you cannot use the average period method. Third condition, if you're withdrawing the money monthly, means the time gap between the subsequent withdrawal is monthly, then it should be monthly only. If you have decided to withdraw the money quarterly, every drawing should be quarterly. If you have decided to withdraw half yearly, every drawing should be half yearly. This condition gets violated when in one drawing you're withdrawing monthly, second drawing you're withdrawing after 1 quarter, third drawing you're withdrawing half yearly, which means you're withdrawing in haphazard manner. So when you do in a haphazard manner, you cannot get the answer under average period method. The average period method will not throw you the right answer if the periods are different. So for you to apply average period method, the amount should be same. The date on which you're withdrawing the money, first, 15th or 30th, should be same. And the time gap between the subsequent drawings should be same. The frequency, that is the gap between the 2 subsequent drawings, should be same. If all the 3 conditions satisfied, all the 3 should be satisfied together, only then average period method can be used. Otherwise, you cannot use it. You have to use only either simple method or product method. If you come back and observe the previous question, people, which condition is violated here? If one violated also, I cannot use average period method. Which condition is violated here? Sir, all the 3 conditions.
All 3.
You look at the amount, different. You look at the date, different. You look at the time gap. First May I withdrawn. Then after that, August. How much gap in between? June, July. 2 months gap here. And here, how much is the gap? 1 month gap.
1 month.
So time gap between the 2 subsequent drawings is also not even. Hence, I cannot use the average period method. Sir, if the 2 conditions were okay, 1 condition was wrong, still can I not use the average period method? No. For you to use average period method, all the 3 conditions should be together satisfied. If any one condition violated, you cannot use average period method. Then what will you use? Either simple method or
Product method.
we'll do one question based on this. A partner draws 10,000 per month. Under the partnership deed, interest on drawing is to be charged at 5% per annum. calculate interest if the drawings are made regularly. So what are the three condition, people? What is the first condition? Amount of drawings.
Same.
The question says the partner withdraws 10,000 per month. Means every time when he withdraws the money, he's withdrawing only 10,000 rupees. So first condition satisfied. What is the third condition?
Date of drawing.
Whenever he withdraws the money, it should be in the regular intervals. Means the time gap between the two subsequent drawings should be same, or the time gap between all the drawings should be same. He is withdrawing the money every time monthly. So third condition also satisfied. And then the question says here, is withdrawing the money in the beginning of the month. Beginning of the month means what? First. Middle of the month means when? 15.
15.
End of the month means what? 30 or 31. So here, second condition also satisfied. So which method can I use now?
Average period.
Average period method. So what is the formula for this under average period method? The formula for calculating interest on drawing under average period method. IOD is equal to
Drawings.
total drawings,
Drawing.
that is drawings of the entire year multiplied by
Date.
interest on drawing by 100 into
Average
average period by 12. So what is the total drawing here? So 10,000 is withdrawing every month.
Month.
1,20,000. What is rate of interest?
5%.
5 by 100. 5 by 100. Average period by 12. Average period by 12. Average period is not given. Oh my God. Average period is given the question. They will not give you. You have to calculate. How will you calculate? You remember I gave you this format in the textbook.
Yes, sir.
Textbook I shared a separate PDF to all of you in the group. The same thing I've incorporated in your notes also. So you don't have to refer to a separate PDF. This note is good enough. Frequency of withdrawal, monthly, quarterly, half yearly. Time of withdrawal, monthly beginning, monthly middle, monthly end. I'm withdrawing monthly at the beginning. What is my average period? 6.5.
6.5.
I'm withdrawing in the middle, monthly. What is my average period?
6.
I'm withdrawing monthly and at the end of the year, 5.5. You understood how to read this matrix?
Yes, sir.
Now, in the regular classes, we discussed how this average period needs to be calculated. Yes or no?
Yes, sir.
I'll not do for all the 9 questions. I did for all the 9 in the regular classes. Here, I'll do only 3 explanations. What is the formula? What is the formula to calculate
Months
average period?
after first drawing plus months left after last drawing.
Number of months. I need to calculate number of months. From the date of first withdrawal up to date of last withdrawal, nahi, up to date of year end. That is 31st March. Plus, I need to calculate number of months from date of last withdrawal up to the date of year end. This formula looks complicated, but it's very easy one. By 2. Average, it is average. In the numerator, I've taken 2 items. So I'll divide by 2 only. Now the question is, sir, what is this? I need number of months. Simple if I have to tell you. When is the first withdrawal happening? When is the first withdrawal happening? See that. From that date till end of the year, calculate how many months. Which means the first withdrawal you enjoyed for how many months you have to calculate. Listen to my words very clearly. You have to calculate the first drawing. First drawing you have enjoyed for how many months? And the last drawing you have enjoyed for how many months? One more time. You know the first drawing date? If I'm withdrawing every month, beginning, when do I first withdraw? 1st April. From 1st April till the end of the year, this money you have enjoyed for how many months?
12 months.
End of the year. Sorry, what is the last withdrawal?
First March.
March month. When? 1st March. That money which you have withdrawn in the month of March, you enjoyed for how many months?
1 month.
1 month. So first drawing, how many months you enjoyed? Last drawing, how many months you enjoyed? First drawing, how many months you enjoyed? Last drawing, how many months you enjoyed? So those months you get, do the average of it. We'll do one trial. Frequency is monthly and beginning of every year. Okay. Now, this is the financial year. Guys, in the exam, you will not get the average period directly. You have to calculate. So how the calculation needs to be done, I'm teaching you. And how to buy out the tabular column also, I'll teach you. Now, please tell me, people, we are into a scenario where we are going to withdraw the money monthly. That to when? At the beginning of every month. Means 1 April, 1 May, 1 June, 1 July. Every month beginning, I'll withdraw. Now, please tell me, the first withdrawal is happening when?
1st April.
So 1/4/2000 something. Let's say this is 23/24. So 1/4/23 is the date of the first withdrawal. Do you agree?
Yes, sir.
This first withdrawal, please tell me, how many months did you enjoy?
12 months.
12 months.
When did you do the last withdrawal? So last
Third
withdrawal happens
month.
in the month of March.
1st March.
Month I withdraw. So April, May, June, July, August, September, October, November, December, Jan, Feb, March. March I withdrew the money. But March, when did I withdraw the money?
First.
Sir, 1 March 24. Last withdrawal is on 1 March 24. This money what you withdrawn, you've enjoyed for how many months?
1 month.
1 month. Divide by 2. Means how much? 6.5.
6.5.
Means this 1,20,000 rupees, you've on average enjoyed for 6.5 months. You've enjoyed this money on an average for 6.5 months. Now, what this 6.5 means, we've discussed in detail, elaborately in the regular class. So I'll not be able to go into that much deep. Here, my job is to only make the process simplify. Are you able to follow?
Yes, sir.
Whatever the scenario is given, let's take the next scenario. Quarterly withdrawn. Quarterly withdrawn. When? Beginning. Middle you want to do? Beginning. Please tell me, in a year, how many quarters are there?
4.
4 quarters. Quarter 1, which all month? April, May, June. Then quarter 2, July, August, September. Then quarter 3, October, November, December. Then quarter 4, Jan, Feb, March. 4 quarters. So in the year, how many times will you withdraw?
4 times.
If I'm withdrawing quarterly, in a year there are 4 quarters and I withdraw 4 times only. No, sir. When are you withdrawing? First withdrawal is happening when? So the first withdrawal is happening in the beginning of the quarter. So what is the beginning of this quarter?
1st April.
Sir, 1/4/23 is the date of first withdrawal. If I'm withdrawing this money, here, this money I'm enjoying for how many months?
12 months.
12 months. When is my last withdrawal happening? When is my last withdrawal happening? Sir, quarter 4. When in quarter 4? Beginning of the quarter 4, which is 1st of Jan 24. From 1 Jan 24 to 31st March 24, this money which you withdrawn at the end, quarter 4, this quarter 4 withdrawal has been enjoyed by you for how many months?
3 months.
3 months. Please do average of that. 12 plus 3 is how much? 15 by 2, which is
7.5.
7.5. 7.5. Now, in the exam, please don't sit and calculate all this. This is a shortcut to remember. This tabular column, do you have any difficulty to by heart?
No, sir.
Monthly, quarterly, half-yearly. What is first one?
Monthly.
and
Quarterly.
half-yearly. I'll make you by heart now itself. Monthly, quarterly, half-yearly. Right side. First we have beginning, then middle, then end. 1, 15, 30. In a month, how do you write? 1, 2, 3, 4, 5. So what comes first? 1. Then 15, then 30.
30.
No problem. Okay. Always middle will be equal to 6, 6, 6. 1 column gone. Middle of a month, middle of a quarter, middle of half year is 6, 6, 6. This is true only when your financial year is for 12 months. If you get a financial year of 6 months. Sir, how will I get financial year 6 months, donkey fellow, when the person is starting the business on 1st October? What is the financial year? October, November, December, Jan, Feb, March. There, the calculation should be done in this way only. This is the formula. What is the formula? Number of months from the date of first withdrawal to the end of the year. Means number of months. How many months do you enjoy the first drawing? And how many months you enjoyed the last drawing? Same formula. That's why I taught the formula. This tabular column is true only when the financial year is 12 months. We have to make a specific note. The financial year is less than 12 months. This tabular column will not be of any use. You have to sit and calculate your own average period. Any problem?
No, sir.
No, sir.
No, sir.
The financial is 12 months. Whenever you're withdrawing the money in middle of the month, middle of the quarter, middle of the half year, it is always 6, 6, 6. Now, here and here we have to travel. Left hand side. Plus 0.5. Plus
1.5.
I'm coming. Plus 3.
3.
Left hand side is plus, right hand side is
Minus.
left hand side is plus, right hand side is minus. Left hand side is plus, right hand side is minus. 3 items I have to add. For month I have to add 0.5. So 6 plus 0.5 is how much? 6.5.
6.5.
For quarterly I have to add 1.5. 6 plus 1.5 is how much? 7.
7.
Then 6 plus 3, 9. Easy?
Yes, sir.
Let's do it. So what do? We'll do the tabular column. You don't have to do, just you tell me. Monthly, quarterly,
Quarterly,
half yearly.
half yearly.
Then beginning, middle, end.
End.
Middle 6.
Coming. Middle will always be
6.
6.
6, 6, 6.
When your financial is
12 months.
Left hand side is positive, right hand side is negative.
Negative.
Any problem? Now here
No, sir.
in the middle, how much am I supposed to add?
0.5.
0.5.
0.5. How much I'm supposed to add now?
1.5.
1. How much I'm supposed to add?
3.
On the right hand side, same thing you'll do it, but now it will be
Minus.
minus 0.5. 5.5. Minus 1.5.
4.5.
Minus 3.
3.
3.
Minus 3. 3. 5.5, 4.5, 3. Now this tabular column, I'm telling you at least for next 1 week, every day morning, write this tabular column once by your own self. Continuously for 7 days. Continuously for 7 days, do this tabular column. How much time will it take? 30 seconds. You will never forget this tabular column. If the same question comes as MCQ, what is the average period? Shh. What is the average period for half-yearly withdrawal at the end? Don't sit and calculate there in the exam for MCQ questions. Instantly you have to give the answer. So to be instant in the examination, all this practice is required is what I'm trying to say. Any problem?
No, sir.
Any problem?
No, sir.
No, sir.
Come back to our question. Guys, the money is withdrawn at the beginning of every month. Beginning means left or right. Month means beginning or left or right.
Left.
End means right. Left means plus or minus.
Plus.
Plus.
Beginning, 0.5 you will add on 1.5.
0.5.
6.5 is how much? 6.5. So 6.5 by 12. Now coming back. 120 into 5 by 100 into 6.5 by 12. Now you will tell sir 6.5, how will I divide, sir? We are not using calculator. Very simple. Multiply both by the same amount. So I'll now get 1,20,000 into 5 by 100 into 65 by 120. You can solve it now.
13 by 24.
Anything. Mathematically, you can do anything you want to do. If you are having any shortcut to this, you can do this. No problem. Middle of the month. What is average period? 6. End of the month. Average period 5.5. Beginning of each quarter.
7.5.
End of each quarter, 4.5.
4.5.
Middle of each quarter,
6.
7.5, 4.5, 6. Any problem here?
No,
No,
sir.
sir.
No, sir.
I want every single person to open your mouth and answer.
No, sir.
No, sir.
No, sir.
Is anybody having any difficulty in calculating the interest on drawing under simple method, product method, average period method?
No, sir.
No, sir.
No, sir.
Middle of the month, you want to know how to calculate? Okay, we'll do one more. Sir, middle of the month. Okay, which means every month I'll withdraw when?
15.
15. So when is the first withdrawal happening? April.
15th.
When in April? 15th of April 23. When is the last withdrawal happening?
March.
When in March? Middle
15th.
of March? 15th March 24. Please tell me, this money what you withdrawn on 15th of April, for how many months did you enjoy this money?
11.5.
Here, 0.5 month is there. 0.5 means half a month. 15 days. 15 days means what? 0.5 month. So April, 0.5 month you enjoyed. There is 16th April to 30 April. For half month you enjoyed this money. And then May, June, July, August, September, October, November, December, Jan, Feb, March. 11 months you have enjoyed. So 11 plus 0.5 is how much? 11.5.
11.5.
Withdrawal you enjoyed for
11.
When was the last withdrawal happened? 15 March. This money you enjoyed for how many months?
0.5.
11.5 plus 0.5 is 12 months by 2, which is 6 months.
6.
Book back question, note and keep it. I will not do today. I'll be doing at the end of this chapter. Whatever questions you have doubt, book back, exercise, scanner, whatever, sample paper, board paper, just send me the question number, and if possible, that sample paper number. Shh. See, if you're having any questions from the scanner, I mean from this page rival book, you just have to message me the question number and page number. But if you want me to solve a question which is there in sample paper or board paper or in your school question paper, what are you supposed to do? Send me the question paper along with the answer, because I need to showcase that question paper on the screen. Am I loud and clear?
Yes, sir.
Now, the two important concept which is coming in relation to interest on drawing, which is very, very important. High chances of this segment being touched. But unfortunately or fortunately, this segment has been ignored by a lot of people. It's a very minute concept where people do not pay attention to this at all. But high chances of this question coming in exam. So this is a concept where the rate of interest is given. Now, surprisingly, this concept is applied in your full-fledged question also. This is applied in your full-fledged question also. So please pay attention to these two concepts and then we are done with it. This is a scenario when the rate of interest on drawing is given. Please note that these two cases are only in the context of interest on drawing. This is the only two concepts pertaining to interest on drawing. You will not cross apply this to any other concept. You will not apply this concept to IOC, interest on loan by partner, interest on loan to partner, interest on debenture, to any chapters whatsoever. This you will restrict only to the interest on drawing. When the rate of interest is given without the word per annum, interest is charged without considering the time factor. It means that when the interest is given without the word per annum, the time factor has already been considered in the rate of interest. Now, one example I'll tell you. Let's say 1 lakh rupees a person is withdrawing. 1 lakh rupees the person is withdrawing. Interest on drawing percentage is 12% per annum. When did he withdraw the money? He's withdrawn the money on 1st of October 23. Wait. Don't. Wait. The date of drawing is 1 October 23. Okay. Now, please calculate the interest on drawing using simple method. What is the formula? Sir, amount of drawing into rate of interest by 100 into number of months by 12. What is amount of drawing? 1 lakh. What is rate of interest?
12%.
12 by 100.
100.
Number of months. How many months have you enjoyed this money? Sir, I withdrew this money on 1 October. So we enjoyed the money entire October, November, December, Jan, Feb, March. 6 months I've enjoyed the money. What is the answer?
6,000.
6,000.
6,000. So this is when the interest is given with the word per annum. Now, sometime in the question, what they'll do? No, they'll give the interest rate. Per annum is not given. What does it mean? That means that the rate of interest is already multiplied with this, and then they've given the percentage. My question to all of you, that if I multiply these both, what will I get? Please tell me.
6 by 100.
6 by 100. 6 by 100. If I want to convert this into percentage, what will I do? Into 100, 6 percentage. Now, same question I'll give you. The person is withdrawn 1 lakh rupees at the rate of 6 percentage. At the rate of 6 percentage. I'm not using the word per annum here. Whereas in this scenario, I use the word per annum. Why? Because this 12% is the interest for the entire 12 months. And for that 12 percentage, for how much period you enjoyed the money, you proportionately multiply the time period. But in this question, what is the question done? Whatever is the original interest rate per annum, with that the time factor is already multiplied, and then they gave you the 6 percentage. So will you again consider the time factor? Let's say the person is withdrawn the money on 1/10/23 itself. So in the question now, they're giving the amount of drawing. Rate of interest is given without the word per annum, no per annum. And the date of drawing also is given. Now, what is the calculation of interest on drawing? Sir, amount of drawing into rate of interest only. That is by 100. This rate of interest, how did you get? So rate of interest per annum by 100 into number of months by 12. This part they've already done, and then they've given the 6 percentage. So again here, you don't put 1 lakh into 6 by 100 into 6 by 12. Don't do it. This 6 by 12 is already multiplied with the original interest rate, which is per annum based, Pianchi. Which is per annum based. Already with the per annum interest rate, the time factor has been multiplied. And then they have given you the percentage here. So what is the sense in multiplying the, number of months one more time? What is the sense in multiplying the time period one more time? So you should not consider the time factor, because the percentage what is given is already considered in it, the time factor. So one more time, there is no need to consider the time factor. Time factor means what? Number of months by 12. That you don't need to multiply one more time. Any problem?
Sir,
Yes, boss.
sir, you told this concept is only applied to interest on drawing.
I'm telling you, this concept is applied in the interest on drawing only for 12th standard.
Sir, but I came across one question, I guess, in revaluation account. Somewhere they use this concept, sir.
No,
Not in this
that
book,
case you have
but
to specify the question, because I don't know what has been given in that question. However you interpreted it, I don't know. So my suggestion would be that if you come across this application somewhere else, you have to give me the question with answer and also the source of the question. Because
that
the
was-
entire TS level book and NCRT, you will not find this concept applied anywhere. Now, conceptually, if you ask me, this rule will stand true for all the interest calculation. Whenever the word per annum is not given, the time factor has been considered. That is how it has been construed even in other concept. But in entire 12th standard, they have not applied this concept in any other place. That is why in the beginning I gave that restriction. So if you are coming across any of that question, Kana, just send me the photo of that with the answer. Let me read that question and let me interpret it, and accordingly we'll decide.
actually, sir, I don't have the question. The teacher once told in our class, so.
No, I would want that, because I have not seen this application in any other chapter or any other concept. That is why if you see this concept is in particular stated only in the interest on drawing context. It is not there in any other calculation.
Yes, sir.
Whereas logically, conceptually, this can be applied for all the other concept also, for interest on capital and loan also. But in the entire 12 CBSE, they have restricted these two drawings. Why is there a distraction? If you want to wind up, I'll wind up. I'll wind up. You manage on your own. I'll wind up. Then why distraction? Calculate interest on age drawing 10%. If he's withdrawn 250 during the year, 10% is given. The word per annum is not given. Means with the original interest rate on per annum basis, the time factor has already been multiplied, and then this 10% is given. So how will you calculate the interest on the total drawing? Just multiply the interest rate, you'll get the interest on drawing. Okay, bye. तो wait कर, वो second concept है. Don't get confused. Shh. This is clear. Now
Yes.
comes the second concept. Now comes the second concept. Amount of withdrawal is given. Rate of interest per annum is given. But when the money is withdrawn, the date is not given. When the money is withdrawn, date is not given. Are you able to follow? This is the scenario. This is a scenario where the date of withdrawal is not given. So the date of withdrawal is not given. You assume that the drawing is done in the middle of the period. So you're doing monthly drawing, then you withdraw monthly, middle of the month. So what is average period in the middle of the month? 6/12.
6/12.
If you're withdrawing quarterly, nothing is given when the withdrawal is done. You assume the withdrawal is done middle of the quarter. Middle of the quarter, what is average period?
6/12.
If you're withdrawing half yearly, date of withdrawal is not given. We assume that the withdrawal is done middle of the half year. In middle of the half year, what is average period? 6 months.
6/12.
That is the logic that has been applied here. So, whenever the money is withdrawn and the date of withdrawal is not given, we'll assume that the drawing is happened middle of the period. And whenever you take middle of the period, always it is 6/12. This is only for the financial year. This is for the financial year for entire 12 months. The tabular column 6 middle is only for the financial year, which is having all 12 months. The financial year is different, then the average period will be different, and here also the number of months will be different. So let's have a look into it. Calculate the interest on drawing of Rakesh at 10% per annum for the year ended 31st March 24 in each of the following alternative cases. If is withdrawn during the year 30,000 rupees. So total drawing is 30,000 rupees. So 30,000 into rate of interest is 10% per annum. Means what? We have to multiply with the time period. Had they just given per annum 10% without the word per annum, means what? The 6/12 is already been multiplied. So again 6/12 not required. But here have they given the just interest percentage? No, they have given with the word per annum. So 30,000 into 10/100. Now date of withdrawal, what it is? Have they given any specific date of withdrawal?
No, sir.
In the absence of the information, we assume that the withdrawal is done in middle of the month, middle of the quarter, middle of the half year. Hence, it is always 6/12. Any problem?
No, sir.
How much?
1,500.
1,500. Okay. 1,500. These are the two concepts. Please take a highlighter and highlight this. And in this page, for God's sake, don't highlight anything else. So when you flip the page, at least during the exam, you'll come across this concept. Anyways, I'll include this in your concept notebook. So there's no way that you'll miss it out, but still. Easy?
Yes, sir.
Now, last journal entry, with that we're binding up. Interest on drawing, journal entry. Due entry. Sir, interest on drawing is income for the firm because the partner is withdrawing the money. And for the money what is withdrawing, we are penalizing him. So he has to pay money. So for us, it is income now. We'll get the money. So it is income for us. Credit all income and gain. So 2, interest on drawing. This money partner has to give me. Until he gives me the money, I will catch hold of his capital account. I will catch hold of his capital account. I'll freeze his capital account. I'll attack his capital account. I'll reduce his capital account. To increase capital, credit. To decrease capital, debit. So partner's capital or partner's current account debit to interest on drawing. Any problem?
No, sir.
This interest on drawing is a nominal account. It has to be closed by transferring to appropriation account. What is the entry?
IOD to
P&L appropriation.
P&L appropriation account. So in the P&L appropriation account, by IOD you get. So it is because of the closing entries only, you get all the items under trading P&L and appropriation account. Any problem?
No, sir.
No, sir.
Rest the questions will be twisted here and there. If there is any question that you want me to solve particularly, I can do it. Or else we can slip on to the next concept. There's one concept to be discussed here. Okay, before that, So this is a type of a question where they'll give you interest on drawing in the question. They'll give you a rate of interest also in question. They'll give you average period by 12 also in the question. What they will not give you, total drawing is not given. So mathematically, you know how to solve this. This is that one type of question where they do the reverse calculation. Mathematical way, it's easy. In this, if you have any doubts, you can let me know. I can solve it in any particular class. If you're a non-maths background, means what, 11, 12, you're non-maths. Till 10th, you're being maths only, no. Till 10th, maths is compulsory for everyone.
Sir,
So this is
X का problem आते हैं
कौन सा x?
ये वाला
अच्छा तू सडनली x बोलेगा तो मेरे को क्या समझ में आएगा? क्लियर बोलना ना कि भाई मैथमेटिकल x के बारे में बात कर रहा है. अभी ब्रेक में हमने कुछ बात की तो बीच में x बोलेगा बीच में तो मेरे को क्या लिंक होगा? तक्षशिल क्यों बात कर रहा है? हाँ. Now we talk about mathematical x. So this is that everywhere is telling. Till 10th it was there. No problem. Okay. Anybody's got Alzheimer problem in 11th and 12th since you've not done maths, you've forgotten everything in maths. Any problem?
No, sir.
No problem. Okay. Past adjustment is there. There's one more question that we have to discuss. Tell me which one. Transfer to reserves. The 3 questions based on that. That also we'll do in the next class. So next class, my target is to finish the 3 questions based on the reserves, past adjustment. Minimum guarantee, I doubt I can complete in next class, but I'll try my level best. So today is what, Monday? We have Wednesday. So definitely Friday, I want to be done with this topic. Right? By Wednesday, can you give me some questions to work out from this chapter? The two questions I've taken from the exercise, which I felt it should be done in the class. What Ashwin told is 2 questions are similar model. If I do one, the other one is doable. Easy one only, that is. So if there is any challenging question, yeah, Varun has got one. If you can just let me know in Friday's thing, I'll try to summarize. Please note that next 2 classes, since we have a target to complete this, I might take the classes till even 9, 9, 10 also. 9 o'clock, 9, 10. If my target is over before that, I leave it. Otherwise, 9, 9, 10 maximum to be done and dusted with this chapter. Just guys, whatever questions you have doubt, please put me in the WhatsApp group. Right? So let's wind up, people. That's all from my side for this session. I'll see you on the next class, which is on Wednesday, 6:30 p.m. sharp. Until then, bye-bye. See you. Take care.
Thank you, sir.
Thank you, sir.
Thank you, sir.